So what do I mean by market sentiment shift? Well, start of the year, it was all about technology, and everybody was investing in any big cap tech stock, whether it was Apple, Microsoft, Google, Amazon, Meta, or Facebook. The list goes on and on. Nvidia, the list goes on and on and on. And tech stocks really carried the S&P 500, carried the Nasdaq to tremendous gains in the first half of this year. Well, coming, I guess, into July, we started to see a bit of a shift. A lot of individual investors started to notice that these tech stocks might be a little bit stretched and took some profits off the table. And I guess what benefited from some of those sells and where that money went into, well, it was more maybe the more value names, as we call them, not the high growth tech names, but value. And I think some of that money went into bank, went into pharmaceutical, went into maybe some retail names like a Home Depot, etc. So I think there's been a sentiment shift in where investors are putting their money. No longer are people just buying tech. I think they're buying more of a diversified portfolio. And we've seen examples of this. As an example, here I have a regional bank in the US, PNC Financial, a stock that some of my clients own. Again, you have to have the right mindset, risk tolerance, time horizon, et cetera, to own it. But you can see that a stock like PNC Financial, about the 7th or 8th largest bank in the United States, we call them a super regional bank. You can see the stock has moved higher. It was once in the 115, 120 range, now well above 130 and closing in on perhaps 140. So again, money coming out of perhaps tech or some of these big cap names and into regional banks like PNC Financial. I also have US Bancorp, a chart of another regional bank, ground zero for the banking crisis that we saw in the US in March, were the regional banks, although these are super regional banks, so very different. These are some of the largest banks in the United States. They are not big money center banks, so meaning they're not right across the country, but they're in certain regions of the country, albeit very large regions of the country. So US Bancorp, they just reported earnings last week. Their earnings were actually pretty good. And once again, they talked about how their business is on solid footing like PNC, and that they have no worries whatsoever with respect to their loan book. Their assets are going higher. They're not falling, and everything is manageable and doing very well. So, and again, you look at some regional banks, money is definitely flowed into those types of investment ideas. And lastly, I have a third chart here, a stock of Caterpillar, a name we don't talk about quite often, but you can see here, Caterpillar is near at all-time highs once again, just under $265 a share. It's been benefiting from, I guess, the spending that has gone on by governments over the last few years. It's also benefiting from a resurgence in Asia. They do a lot of business in Asia. But overall, this idea of building construction, building railways, building roads and bridges, and anything and everywhere you can imagine, you will probably see a cat vehicle there, bulldozer, or whatever you're going to see. And Caterpillar has definitely done well. So once again, we're starting to see money flowing out of tech and into other areas. Now, don't get me wrong. I'm not saying to sit here and sell your technology names, but I've definitely trimmed some of the big winners, and it's really risk management, right? I think you need to trim some of those winners. We're still going to own the NVIDIAs. We're still going to own the Alphabets, the Amazons, and the big tech names, but maybe we just trim some of the profits and we move those profits into some of the other names that haven't moved higher as yet. So I think that's what we're seeing in the market. We're definitely seeing a market sentiment shift towards maybe a little more value and other sectors of the market.